Hi everyone, my name's Simran and this is my friend Sheena. Like you, she's also an accountant. Sheena's boss has asked her to focus more on the internal controls of financial accounting, specifically petty cash funds. However, she is having trouble understanding this concept. Sheena is often frustrated at work due to not understanding this concept, so let's help her out. First of all, Sheena needs to understand what a petty cash fund is. A petty cash fund is an amount of cash kept on hand to pay for minor expenditures. The operation of petty cash fund involves three main activities. The first, establishing the fund, secondly, making payments from the fund, and thirdly, replenishing the fund. A petty cash fund is established by writing a check for the amount of the fund, cashing the check, and placing the check under the care of an employee. Now Sheena must make a journal entry to record the establishment of the fund. For example, suppose the business cashes a $100 check to establish the petty cash fund. The petty cash fund is recorded as a $100 debit since the asset is increasing, and the cash is recorded as a $100 credit since the asset of cash is decreasing in the business. Payments from the petty cash fund can be made from one in two ways, either directly taking cash from the fund, or employees can seek reimbursement from the fund for payments they have personally made. No journal entry is required in this process. As the cash in the fund decreases, the fund must be replenished. To do so, the remaining cash in the fund is counted, and the company cashes a check for the amount that brings the total cash in the fund back to the original balance. Now, a journal entry is required to replenish the fund. For example, suppose the business uses $85 from the petty cash fund to pay from expenses. These expenses will be recorded as a debit as they have increased, and the cash is recorded as a credit as the asset of cash has decreased in the business in order to bring back the fund to the original balance. When a petty cash fund is replenished, the amount of cash needed to replenish the fund should equal to the total amount received. However, this is not always the case. In such cases, the discrepancy is charged to an account called cash over and short. Cash over and short is a temporary account that can have either a debit or a credit balance depending on the situation. Now, a journal entry is required to include the cash over and short account. For example, suppose a business requires a check of $87 to fully replenish the fund. However, there are only $85 of receipts. This $2 difference is charged to the cash over and short account and is debited as expenses have increased. Now Sheena finally understands the concept of petty cash fund and starts right away. Sheena is very happy as she finally understands the concept of petty cash fund and impresses her boss with her work.